All right. Thanks for your patience. Good afternoon, everyone. Thanks for coming to our September 17th meeting of the Inland SoCal Housing Collective. As always, we have a great agenda today. We have some great presenters sharing out. Um, we are, let me advance the slide real quick. So we have two speakers coming today. Our first, talking about a savings match program called Empire Builder Initiative at NHSIE. And then our second will be Climb, talking about Climb to Reach Your Homeownership Goals, a program at credit.org. And so after our two presenters, we'll go off into some time sharing out about pillar updates and activities and some things we've been able to advance in the collective space. So thanks all for joining. Let me stop sharing and I could let Damien jump in. And so with us today from NHSIE, sorry, they're gonna let me. So we have Damien. Damien Duncan is the Director of Housing Programs and Services at NHSIE. He entered the real estate and construction industry in 2004 in real estate sales and worked with many asset managers in the disposition sector during the downturn. He received his real estate's broker license in 2009 and was involved in real estate flips and holds. And Damien has come to NHSIE team to lend his experience in realty to the organization and help its clients set themselves up for sustainable home ownership. So, Damien, I'm glad you were able to get the PowerPoint up and ready, and feel free to jump in and get started on this. Thanks for joining us.
Am I still on camera? I can't tell.
No, you're good. We could see you and hear you.
I see you talked to Joel. I definitely need to submit to them a new bio. I had no idea that you did such good research.
I'll take
Um,
it away.
hi, you heard my introduction. I'm Damien with NHSIE. Today, what we are here to talk about is our Empire Builder Match Savings Program. So it's similar to the ones you guys have seen probably, like United Way and different organizations that do the same thing. It's a 2-to-1 match. It is up to $1,000. So that could be, saving, you know, $100 a month for 10 months. They can be in the program. There's 6-month program, 12-month program. And what it is at the very end of the savings plan that you enter in with your client, you match it 2-to-1. So, and the most they can get is they go up to 1,000. So they save 1,000 over that course of time, and then they come out with 3,000. So let me get through the slides here. But basically, 2-to-1 match program. There's about 125 spots. So income requirements, they need to be 80% or lower of the median area income. They have to reside within certain census tracts. And if you guys don't know how to use you can look it up. It's called the SIMS tool, CIMMS tool on the CDFI, the Department of Treasury website. And you can actually access the maps yourself. And the maps we're using for this are ERP and the majority minority area maps. So you can see if they live in that area. Um, and if they're in one of those zones, they qualify because this program is being run with CDFI money. It's through a CDFI grant, so it is coming from the Department of Treasury, and the money has already been allocated, so don't worry about it being, not distributed. We already have it. So basically, we intake all of the clients. We do brief counseling with them to go over, their situations, their goals. We do an action plan with them, and if it's appropriate, we help them with their budget. And then they basically are in contact with us once a month. They have one single savings account. They can't change it, and they provide us with the proof each month that they saved the extra amount of money, and we mark it down in the system for their completion goal. We look up their address. We make sure that they're eligible, and then, like I said, they attend a short counseling session with us. The savings period, right now, the cohort we're running is a 6 month commitment, just to build consistent savings habits. They do have to put at least 50 a month. So we want, it was a minimum level of commitment each month. And then the maximum they can get back, I covered it earlier, is $2,000. All right. So we had the first cohort start in July. We have 3 participants that are getting ready to finish. We are just starting one right now with 9 new participants. So that leaves us with about 113 spots still open. So we encourage people to apply for the February 2026 start. And of course they'll be graduating August 2026 and have a bunch more money. So basically, yeah, this is part of uh, our goal of helping low-income families not only attain home ownership, but to get themselves on track for actually building, assets, building their savings. I tell a lot of the clients that the emergency fund is more important than any other fund, even the retirement, home ownership, everything, because that emergency fund is really what gets them started towards the habit of saving. And it's more of like a psychological tool for them, to keep growing and keep being successful, because it eliminates a lot of that worry and that stress from just everyday life situations. Um, I will see if there's a link to it that I can get. Right now, any questions you guys can reach out to me. You can reach out to Joel. Um, I know some of you in here have Kaylin on your speed dial, so you could even reach out to Kaylin and get more information. But I welcome any questions that you guys might have.
Damien, do you think, I don't know if Joel's on, do you think someone could place the link to this in the chat or a flyer? If not, I could go into your website. I'll find it and try and pull it down if not. But I have a couple questions. When does the cohort start? Like, when does that process, if you guys are ramping up to start a new one, how can folks who
The
work in,
next round, they're going to start February.
they're starting February. So the process is starting now to collect, to get intake
Yeah, they
information.
contact us. We get through the counseling session and the pre-qualification and map out how it works. We look at discretionary income to see, hey, how much of this do you want to put towards savings?
Hmm.
Sometimes only people only have $300 extra. So if we can get them to commit 100 of that, now they only have to commit 50, but that's a good goal and they can make a lot during that time.
Hmm.
But I'll get that flyer. I don't want to close any windows right now.
Yeah.
My computer is kind of having a crisis. Let me go back to
Yeah, I could look on the website real quick and see if I can pull it down. Jay has a question. What if they do not have a savings or checking account?
then they'll have to get a checking or a savings account. And there's some great options out there. Melanie works a lot with Bank On. But what self-help, Westcom, just I guess they have if you have a direct deposit, they have a like $200 extra you can get. So there's a lot of good options out there.
And just to add to that too, so the Inland SoCal Housing Collective, Jay Miller specifically, is a part of the team, and he leads out the Bank On Coalition. And I know we've worked with, NHSIE, and you guys have that list too, but we have a list of Bank On certified products, meaning Bank On checking accounts that are approved, that have really good metrics. It has minimal opening fee or deposits, minimal monthly fees, They can't be charged if they, there's no overdraft fees, there's no overdraft. There's different metrics that make up a bank-on certified product that make them safe. And so we work with like NHSIE and other partners in this space to ensure that their housing counselors or other people who work with clients that might need accounts have access to that information. So if they don't have an account and they come to you, they can, look on this list, hey, who's in my neighborhood or have I worked with, or what has the best metric, or what makes sense, what type of accounts make sense from our list and from our website, and they can open an account if they want to and leverage that resource. Mhm. Let's see. All right. Any more questions? And then through that process, I was hoping, Damon, you could tell us a little bit more about the counseling process. So once they come in, how frequently are they meeting with you guys? What tools are they developing? Are they creating a spending plan, or is there like a goal that they have to identify towards this? And I'm only asking this of just knowing or learning about other match saving programs. What's specific to yours?
The
What's unique about
majority,
yours?
I mean, the majority of the counseling clients, and I mean, even post-purchase
Hmm.
counseling clients, the majority of counseling clients are gonna have a savings plan.
Hmm.
Especially if they counsel with me, it's just if you don't have 6 months of expenses in a separate savings account, like that's just, even if you came just for rental counseling or anything, like I'm gonna put you in a savings plan. We're gonna try to get the budget, eliminate some waste and stuff to where they actually have a discretionary income to have a savings plan. With some individuals, it might be just there might be some credit on there where we work with them, and kind of analyze, go over their credit, see where they're missing their points at. Some people, it's something totally that what not theirs. They can prove that it's not theirs on their credit. Those are
Hmm.
really easy. Some people have late payments, so you're working with them longer term. As
Hmm.
far as frequency, it's really as much as many appointments as you want to schedule. If you wanted to schedule every month, we would have a counselor ready for you every month. With some people, especially like the pre-purchase, it'll take them a couple of months to get back to us. But we always kind of catch up with them. We go over the goals from their action plan. And we're just here to provide support all around, even from getting in a rental unit all the way to, okay, I bought a house with an NHSIE down payment, and now I'm ready to add an ADU, or I just want to know more about home ownership in general because a lot of people get into houses. It's the first time they ever had to do maintenance or repair stuff on their own. So we talk to those people as well. So we have a lot to give over here. If anybody is ever interested, or if you have clients that are interested.
Yeah, so does the cohort, we have a question in the chat from Heather Sanford. Does the cohort meet in person or online? And how often during the 6 months?
With these two, it's been on Zoom,
Mhm.
and we check in monthly.
Well, that's great. That makes it very convenient for folks across the region to participate. And again, this is open and for the entire Inland Empire, right? As long as they qualify within those
Yes,
um,
those
the
little zones.
maps. Yeah. And so when you're done, I was hoping you could drop that linking tool to the maps so folks can get an idea of where, if they're in a certain city or in a certain area, they could look at that to see if they have current customers or clients that they're working with that can do that. So
Absolutely. Now that I don't have to get this presentation to work again, I'll find that for you while you speak.
all
Do you
right.
have?
Well, I know that you're sharing screen. If you have it available on your screen, you could go ahead or you could stop sharing screen if you want. Um,
Oh, it didn't stop sharing my screen.
you're still sharing screen. Yeah. I think I might be able to stop it.
You stop it. I'm acting as if I stopped it already.
Oops, I stopped your video. My bad. That's good. There we go. I did it for you. All righty. Awesome. Okay, well, thank you. If you have any questions for Damien, feel free to pop that in the chat. Damien, if you could put your email address in there, that would be great too. Just so that way, if there's folks that are that anyone's working with, I think would be a great candidate for that. Um, um, we'd love to be able to connect them to you. And so, yeah, we have some additional questions in the chat. And you could, if you could look at those and follow up with them, that'd be great.
I will.
Awesome. Thanks,
That'll make
Damien.
it
So,
find the
um,
link to
we're
the
going
map.
to pivot over to Michelle now. So let me grab your presentation. I have it for you, Michelle.
Okay, great.
Um, so Michelle is a senior operations executive with extensive experience in nonprofit financial counseling, housing programs, and regulatory compliance. So as senior vice president of business operations at credit.org, she oversees national counseling, national credit counseling, debt management, and housing stability, ensuring compliance with NFCC and HUD standards while advancing operational efficiency and client outcomes. So if you haven't picked up, we have a theme for this month's meeting. For sure. So go ahead, Michelle, if you want to get started, I'm going to be sharing that out right now.
Okay.
Your PowerPoint.
All right. Sounds good. So thank you all, and thank you, Melanie. So once the PowerPoint comes up, I will get started. You're going to jump into slideshow mode.
Yeah, I pressed it, but
There you go.
it's thinking. There we go.
There it
All right.
goes. Okay. So today I'm going to talk about our CLIMB program. So CLIMB isn't an acronym. It's a powerful metaphor for overcoming challenges and achieving long-term goals. Our approach at credit.org is to offer what we call whole body financial counseling, where we look at the client's entire financial picture, their budget, their debt, their credit, housing, savings, and their goals. And together with our CLIMB clients, we design a plan with action steps that are realistic and achievable. Okay, next slide. So credit.org was founded in 1974, so we're in our 51st year. We're a nonprofit organization focused on financial wellness. We're a HUD-approved housing counseling agency and consumer credit counseling services. We're located in Riverside. That's our main headquarters, but we do have remote offices and we're in different HUD states. So we are nationwide. So we provide counseling services nationwide. So today, let's see, go to the next slide. There we go. Perfect. So climb eligibility. So we mainly focus our climb journey on California, although we do offer multiple counseling sessions if consumers do come back multiple times and want to check back in. But the climb is specific toward California residency. The counseling aligns with one of four pathways. So the pathways are home ownership creation, consumer loans, credit visibility, identity theft recovery, and prevention. Clients go through multiple counseling sessions. The goal is to help them climb toward their goal. And while typically the sessions range between 3 to 6, some clients meet the goal sooner, and so they require less sessions. Sessions are typically 45 to 60 days apart to allow the clients to work through the action steps that are provided by the counselors. And all sessions include a soft credit pull and comprehensive budget review. Okay, next slide. So why whole body counseling? So again, with all of our counseling, we follow this model. It considers all aspects of an individual's financial life, similar to how a holistic medical assessment would look at your overall health. So rather than focusing on a single issue such as debt or credit, it addresses every financial component, including income, expenses, savings, housing, long-term goals. And this method helps clients build financial stability in the short term while planning for future well-being. So you might have a client that calls in, maybe they're struggling with credit card debt, but as you go through the counseling, you're learning that the reason why their credit card debt has increased is because maybe they've charged their rent, or maybe they're putting all of their essential living expenses on their credit cards in order to maintain their rent or their mortgage payment current. So it's all interconnected. So that's why we focus on this whole body counseling. Next slide. So with Pathway One, it's home ownership creation. Clients include renters or those living with family. We use budgeting, credit building, and debt strategies to help clients reach mortgage readiness. And this includes education and down payment closing cost resources. So we also have clients that maybe start on one pathway, they finish through, they get to where they need to be, and then maybe they want to focus on one of the other pathways. And I'll show you those kind of as we go along. Next slide. So pathway two is consumer loans. This pathway focuses on clients in need of debt relief. We complete a soft credit pull and we review all the debts with the clients. When appropriate, we enroll them into a debt management plan. And for those of you who don't know, a debt management plan, or DMP, combines all unsecured debts into one monthly payment, often with reduced interest and fees, so clients can repay balances in about 3 to 5 years without entering into any kind of new loan or getting any other debt. So I want to make sure we all understand that DMP is not debt settlement. It's very different. With a DMP, your debts are repaid in full. We have relationships with the major creditors, and we work directly with them to secure concessions like lower APRs, waiving fees, to help clients make one single monthly payment. The one monthly payment comes in, the payments are then dispersed to each creditor. Accounts are closed during that time so that there's no new charges while on the plan. And if clients maintain steady on-time payments, the balances decline month over month, leading clients to financial freedom. So no more of those 10, 15, 20 years to pay off your debt. You get into a structured plan. When one creditor is paid off, that payment then moves on to the next creditor, and it just keeps compounding until you're out of debt within a 3 to 5 year time span. Okay, next slide. So pathway three is credit visibility and banking access. So both thin file and low credit scores fit here, as some clients may have a robust credit report, but an inactive credit file. So they technically have low credit visibility. For example, one trade line updated in the last, must be updated within the last 6 months to be scorable. We also connect clients with Bank On accounts. So they have Safe Starter. They use tools like Experian Boost. We enroll them on Banked On with the low fees, the no overdraft charges, no minimum balance requirements. And we educate clients on the benefits of safe banking to reduce reliance on costly financial services. No check cashing, no payday loans. We want to make sure that they stay away from that. Okay, next slide. So pathway four is identity theft recovery and prevention. We provide clients with the resources to report identity theft to the credit bureaus, the creditors, and the Federal Trade Commission to establish an official record. We advise clients to monitor their credit reports regularly using free resources to check for errors and observe progress as they build their credit. And we also recommend setting up alerts with their financial institution so that they can get notification of suspicious bank or credit account activity. Okay, next slide. So those four pathways really focus on the CLIMB program and kind of our whole body counseling model. But I also want to talk a little bit about our role as a nonprofit HUD-approved housing counseling agency. Starting with our pre-purchase counseling, we're here to help prepare for sustainable home ownership. We offer free confidential pre-purchase counseling where we do a soft pull credit review where there's no score impact. We look at the client's budget, we talk them through the timeline, and we assess buyer readiness across the three C's, so credit, capacity, and capital. And we co-create a simple action plan with clear milestones. So we can help navigate down payment and closing cost assistance. And once requirements are completed, provide education counseling and any certificates that are needed by many programs. Okay, next slide. So beyond our pre-purchase, we support clients across the full housing journey. For seniors, we have our HUD-approved reverse mortgage counseling, HECM and proprietary. We have specialized default counseling to resolve taxes and insurance or property charge issues. We do have three e-learning classes. One of our classes is called Reverse Mortgage Academy. Clients can go onto our website. It's about 20 to 25 minutes. They can take the e-learning course. It has a pre and post assessment and some little quizzes throughout it. And it just explains what a reverse mortgage is because many people don't know. And then that way they're prepared if they do want to move forward so that they can go out and meet with a lender. If they still need more after the e-learning class, they can give us a call and we will do a free, depending upon what state they live in. Right now, California, we have a grant that covers the cost. Normally it's $99, but they can do a free session where we'll talk about reverse mortgage a little bit more to try to give them some more education. We also have Rent for Success and Rent for Recovery. So those are two new e-learning platforms that we actually just launched last week. Rent for Success focuses on how do you become a successful renter? You're not renting yet. You need to know some facts to be a successful renter. And then Rent for Recovery is for those that are already renters who may be facing some sort of financial hardship. We also do disaster recovery planning, foreclosure prevention, and homelessness and housing crisis counseling. Next slide. And then finally, I want to talk about our virtual homebuyer education course. So this is an 8-hour course where we cover the essentials, budgeting and credit, mortgage types, underwriting, down payment and closing costs. We actually have a course coming up on Saturday, September 20th. Again, it's virtual. When a consumer finishes, they get a course certificate that many lenders and down payment closing cost assistance programs require. And counselors compare the class along with one-on-one counseling to get clients mortgage ready. We also have a robust library of financial literacy workshops on varying topics. If anybody is interested in having us host a virtual workshop, we're happy to do so. You can reach out to me and let me know. We can kind of talk about the topics we have. We often will do like series, like credit report series or debt series. If anybody's interested in financial counseling or the Climb program, please reach out to me and let me know. We're happy to help any way that we can. Next slide. I think that's the end here. There we go. I don't know if we have any questions. I'm happy to answer anything. Let's see. What's the question? Are the programs or pathways available for HUD-funded program recipients only? No. There's no fee for services. You just call in to do counseling. If you live in California, you can say you're interested in the Climb program. If by chance Climb does have some income requirements, but we kind of bypass that and still follow the Climb whole body model, and we'll still do the series of sessions, and there is no cost. We don't have any DPA programs available. We will look at resources during our counseling to find out what area. The question was, which DPAs do you have? We'll see where somebody lives, what DPA programs are available, and then we can provide resources there. Any other questions?
Do you do any in person?
We do face-to-face in our Riverside office. We do twice a month. We have face-to-face. So yes, We often do video. So if somebody wants a face-to-face and we can't accommodate their schedule, then we're offering video counseling. That's actually taking off a little more than I thought it would. I thought during COVID we would do a lot of video, but most people wanted face-to-face, and now it's kind of shifting a little bit. So we can do video counseling. And if somebody really needs a face-to-face and they're not in our area, then we can always refer out to another agency, but video and phone seem to work well for us. Let's see. Do you make a distinction between inland empire workforce and commuters from inland empire to coastal cities? I'm not sure I understand, Jay. Can you give me a little background?
Sorry about that.
It's okay.
Yeah, just looking at the economic impact of, we're up to almost 400,000 people bringing higher paying jobs from Orange County and LA County into the Inland Empire and out competing local workforce and local residents for the same housing supply. So, do you make a distinction when you advise someone who uh, gets a job in the coastal cities, but wants to live in the Inland Empire because of our availability of homes and purportedly lower costs here?
We don't have anything structured, I would say, in our model. I'm sure when we go through a counseling session, if that comes up with one of the counselors, they do try to advise to the best of their ability or, reach out to try to get additional resources. But I mean, it's not anything structured, that we would cover. But that's a good question and something to definitely table.
Yeah,
Well, let's
yeah.
see. Are the workshop series you provide specific to certain areas or available to residents statewide? They would be available statewide. So we can do a workshop series. Again, they're virtual. We have people from all over the United States. We do this often. And I like to do the series because they build upon each other, but we can even do single workshops. We have a financial empowerment workshop and different things like that. But yes, they are available to residents statewide. We would just need a host, right? Like we're working right now with some property managers and they want to do some workshops for the residents. And so they go ahead and let the residents know. We put on the workshop series and send out the Teams link, and then they join the workshop. So yes, we can do that across the US. Melanie posted the flyers. She posted the face-to-face address. Um, did I catch them all? I think so.
You might have caught it all. If you could, Michelle, if you don't mind,
Mhm.
before we transition, could you put your contact information? So if
Sure.
there's any folks that want to reach out directly to you, they can do so. Um, as well as this video, our meetings are always shared on the collective has a YouTube channel, so we have it on there. So you could always see that. But I know there was a request to have access to those slides.
Mhm.
Is that okay to forward those on to folks? Anyone interested?
Yeah, that's great.
Awesome. Okay, great. And then even if there's a link just to access the Climb program too, that would be great. That way folks can click in directly to that and take a look and see if that works for any of the populations that they might serve.
Okay. Yeah, I can
in the
definitely.
county. All righty. So if there's no further questions, we'll go ahead and we'll open this up and we'll do a slight pivot to Inland SoCal Housing Collective pillar updates. Since we're kind of on this trend of talking about housing counseling, housing stability, financial empowerment, wealth building, all things in that space, I wanted to jump to pillar updates and talk specifically about our wealth building pillar and one of the events that we're planning in partnership with credit.org, which Michelle is from, Melinda Opperman, who's also on the collective board, is assisting in that, and NFCC, National Foundation of Credit Counseling, is also assisting in that. And I'll drop in a flyer for that, so you all can follow up. But just want to elevate an event that we've been planning for quite some time that we're just now launching or just releasing information for November 5th. It is a faith, finance, and homeownership summit that we're doing in Riverside at the UCR Photography Museum. At that event, it's a two-part event. We have a morning session that is focused on partnerships with our faith community. So any faith leaders are invited to this. We're going to be talking about the financial resources available in the IE, specifically, housing counseling, even building wealth. So we're going to have um, some folks come to talk about starting businesses, entrepreneurship, and also homeownership, talking about homeownership and preservation of housing and homeownership. So that being heirs property or estate planning. And all of this event has kind of come to a head because of some conversations the collective had with some of our faith leaders after our faith-based housing forum, which focused on SB4 last year in March. So it's been a year and a half where from that event, besides talking about building affordable housing on faith land or congregate-owned land, a lot of the leaders were talking about how their congregations, their communities, or their constituents are facing a lot of financial hardships. One they specifically elevated was heirs property rights or estate planning, where some of their members were facing they were co-living. Maybe grandma had a house and daughter and family and son or were living in there, paying the mortgage, helping mom out, helping grandma out. And one passed, and the proper rights, the proper documentation to pass down that property to their family wasn't done. And so that property was then put into probate while folks in the house were still being, paying the mortgage down. And eventually this scenario isn't just specific to one example, but this has happened many times and was reiterated by other faith leaders that this happens all the time, that a lot of this generational wealth that's been built is just lost when homes are just put into probate. And a lot of families that are co-living, intergenerational living, are displaced. And so we have families that are also being displaced, moving out of the communities where their kids go to school, where they maybe attend a faith institution there. And so as a result of that conversation and many follow-ups, we kind of we came together to convene this specific event. The morning session is geared towards our faith partners to talk about those different resources, but the afternoon session is open to the collective for stakeholders to attend, where we'll be talking about some of the concerns that the faith community has leveled up, but also opportunities where there's some movement building in terms of wealth building, financial empowerment, what's going on, Bank On. We'll talk about the Bank On coalition. We'll talk about the housing resources. We'll talk about estate planning resources that are in the area. And so be on the lookout for that. We're going to be releasing that the end of this week, beginning of next week, the actual registration link. But I'll drop the flyer there, which doesn't have a registration link yet, but I still wanted to put that information out there for y'all to have. And you'll get that soon. That'll be coming out in a separate newsletter sometime in the next 7 days. So keep an eye out for that. We're excited. We hope that many of you guys can attend. If you know, or if you work with different faith groups or faith leaders, please feel free to send them that information and the registration link, which will be on there for them to attend in the morning session. And then please feel free to come to the afternoon session too. That will be at the UCR Photography Museum in Riverside on November 5th. Let's see here there. Jay, is there any updates, any quick tidbits about the Bank On Coalition, or anything that I missed?
Yeah, I think there's a lot happening. We recently had a train the trainer event with the Mechanics Bank, which is in the process of merging with Home Street Bank. And so we trained statewide about 200 of their employees who will then disperse this information out to their frontline employees. And then we're just in the final stages of getting ready to do the same with US Bank. and then working on many others. Plus, we'll have a counterpart training that will be for all of our service providers, municipal, governmental, nonprofit, what have you, in our region here as well, so that they can better understand the Bank On program, as well as understand how to talk to the local bank and credit union staff and set up appointments. Because in order for about 1 million people in our region to get a safe, affordable banking account, it's going to require a trusted partner in the community. It could be a faith leader, it could be a nonprofit leader, it could be someone at a municipal office where they get some benefits. Without those trusted partners, they are not going to uh, open any type of account and will continue to use the predatory services that are out there, the payday lenders, check cashers, et cetera. And so that's a concern. Another concern that we're watching from the wealth building perspective is uh, economic influences that cause the cost of housing to increase. I recall back a few years ago during the '08 crisis, it seemed ironic to me that everyone complained about the cost of gas and groceries, um, clothes, all these different things going up, but they were excited when the cost of housing went up for some strange reason because we all thought we were getting wealthy, but we were just basically keeping even with everyone else. And so we had a recent presentation from the city of Rancho Cucamonga in which we asked how many of the employees in that city's office were able to afford housing in the city of Rancho Cucamonga. And I think the answer was close to zero. And so our concern is that we preserve housing at an affordable rate and take whatever measures are possible to take to plan for the ongoing continuing influx of commuters from other areas. Disney is planning to hire another 17,000 in the next 5 years. Uh, Virtually none of those will live in the city of Anaheim. But we did see a couple of good things in the news this week as I was riding back on the train. I saw in the San Bernardino Sun an article about the Inland Transportation Commission decided to pull out of the A line extension into Montclair for the commuter rail line, and instead it looks like it will end in Claremont. And the challenge is that each of these things, expanded freeways, expanded different types of transport, make it easier for high wage individuals to come into the Inland Empire and outcompete our local residents for the local housing and essentially drive up the housing costs for all of us. Another article that just came out this week was the plan to remove several hundred or maybe several thousand homes from the area around the airport, San Bernardino International Airport. And so the Inland Valley Development Agency withdrew its approval for a plan to essentially clear out hundreds or thousands of homes in that part of the city of San Bernardino. And they will look to have some other plans. So that's good news that we're not losing those amounts of housing, but we do need to continue looking at that and watching for those types of things. So any organization that wants the training, whether you're bank, credit union, or service providing organization, I'm happy to talk to you and get that on the schedule for the future because we need people to be able to walk into a branch if they choose to on their own and have a positive experience of opening a safe, affordable account. And too many times that is not happening right now. So that's what the training is about.
Thank you, Jay. I appreciate it.
Thank you.
Next up, we'll have I'll have our educate and advocate for public policy pillar. Our chair, Taylor LeBolt Varner, who our co-chair, who will provide a little update for us on what's happening the past 30 days there.
Yes, hi everybody. Can you hear me?
Yeah, we
Great.
can hear you.
Apologies, I couldn't come on video. I'm actually traveling at the moment, but for policy, a lot is happening. Many of you in the educate and advocate pillar will know our priorities this year was really to elevate the need for funding and funding that works for our region, especially given the lack of funding that was included in the 2025 budget. So it's a little mixed bag. The 2026 bond was not approved in time for the legislature's recess, and so did not make it. It has not been approved yet, so that's remains a priority, an even bigger priority for us this fall heading into next year's session. The good news is that in the extension of cap and trade negotiation, a flat amount of 800 million a year was allocated for the Affordable Housing Sustainable Communities program, which is actually more than the historic high of a year that for a round that we've seen in that program. So that was one of the three-prong like funding priorities of the pillar. So we're excited to see those changes. We'll have to we'll remain engaged on the guidelines, especially on the ASIC program, and make sure that regions that are sometimes underrepresented, like the Inland Empire, get their fair share. But that was a big win, and the bond is kind of next steps, what we're all focusing on. So we meet first Tuesday of every month at 9 a.m. on Zoom. If you're interested in policy and have work, you want to roll up your sleeves and work with us, you're welcome to join.
So just to kind of pin in a little bit more too, so the ASIC advocacy and education and commenting that we've done the past 2 years has I hope I mean, I don't know if I have like a direct correlation, but I do believe that there is. We've had this past round, we've had 3 applications for ASIC in our region, which historically it was like one every other round. So it's been really low when we had 3 in 1 round from our region. So that's great. The program guidelines are a little bit more relaxed, allow more folks in our region to apply for those funds, as well as I think more folks in our area know about it. So we'll continue to advocate now that we know that Cap and Invest, formerly Cap and Trade, has continued to fund it and expanded it a little bit to be at the table to ensure that we can draw down funds to our region.
And one more thing, Mel, is that while the legislature has convened, the governor still has until the 13th now to sign the bills. And so in our next meeting in October, we'll talk about what made it to the governor's desk. We'll talk about the cap and trade proposal and other moving parts. But between now and October, there's a lot of Governor Newsom has a lot of things to sign and review.
Mm-hmm. Yeah, a lot on this plate. And I know there was another shared, I know, Ayako, you're next on here to present on the expansion of housing solutions pillar, but would you mind popping in and sharing about the shared housing legislation that's on also the governor's desk too?
Sure. Good afternoon, everyone. Ayako Utsumi with Mary Erickson Community Housing. I'm Vice Chair of Inland SoCal Housing Collective, and I lead the expansion of housing solutions pillar. And There are a number of members of Inland SoCal Housing Collective, and led by Dawn Smith, is Dawn on, Melanie, and some others are focused on expanding the shared housing model throughout the Inland Empire as one tool that we can use to take existing assets of existing housing that is available, empty bedrooms and homes that are already there, and allowing, well, in this case, I think we're focused on homeless individuals to allow them to share housing together, since building new housing is so expensive and the timeline takes so long. Why not use the available homes and bedrooms we have in our region? So the shared housing bill of that's AB Assembly Bill 474 has gotten, it is a shared housing bill. It has gotten through the Senate and now it sits on the governor's desk. So basically what it does is it gives incentives for people who older adults who own homes with empty bedrooms to give them some more legal protections, make it a little easier looking at lodger law, which we don't need to get into now, but just easing the playing field, evening the playing field to make renting a room in your house a little more financially attractive. And again, we want nonprofits to be there to facilitate those matches because we don't want our older adults to be put in unfavorable situations by not having the right renter. But anyway, it's getting state attention. And if you can, I will put in the chat the link by Leading Age California, a nonprofit senior older adult advocacy organization for nonprofit housing. They have a link to send a letter to Governor Newsom to encourage him to sign this bill. So again, one state policy method of expanding more housing at a tiny fraction of the cost. Thanks.
Thanks, Ayako. And we'll be tracking, and then as Taylor stated, in our next policy pillar meeting, which is the first Tuesday at 9 a.m., we'll be seeing what had made it across thus far, the governor's desk. So what's been signed, enacted, and what is still remaining. And then just probably a follow-up conversation too about the bond since it's converted to a 2-year bill. So please join us. If you don't have the link for that, let me know and I could send it. Also for our wealth building and preservation pillar too, if you want to join that, drop it in the chat. Or you could private chat Jay too, who's on here, and he can make sure that you're there too. So Ayako, do you want to go ahead and give an update for expansion of housing solutions pillar?
Hello, I am here again. Again, we meet the second Thursday of every month from 9 to 10 a.m. Second Thursday, 9 to 10 a.m. We were a little off schedule this month because of the SCAMP, Southern California Association of Nonprofit Housing Annual Conference. I see a number of people on this call that were at the conference. So I did want to mention that our focus is middle housing. Last year, we kind of had more of a focus on homeless housing. This year, we thought let's focus on middle housing. I believe that some of you may have attended the Small Lots Big Impact seminar. Some nodding heads. Melanie went. So anyway, UCLA City Lab undertook this very, very interesting exercise of taking every vacant lot, whether it's public or privately owned lot in the city of Los Angeles. They studied each one, looked at all the features, zoning, what kind of uses are adjacent, the slope, the noise, the environment around each lot, and said, okay, what could be built here other than a giant multifamily building or a single family house. So what's in the middle? Duplexes on up, right? So it was a very interesting exercise. They put out a design contest and they picked some 30-some designs that could fit on sort of these average small lots, which again apply to the IE. And now their next step is to release an RFQ for developers. And again, developers that would be willing to do a duplex or a sixplex or something of that nature. Again, very interesting to track how this progresses because there are lots of lessons we can learn and bring more housing, both rental and home ownership, to the IE. So let's definitely keep our eyes on that. And again, we don't want to take our eyes off of ownership, even though we know the rental situation is so desperate. But we must build wealth. We must transfer wealth. We must help families establish roots, a deeper roots in the IE. And one of the ways to do that is the American dream of home ownership. So we'll continue to watch that. Also, we were taking a closer. Melanie already mentioned that faith-based initiative around home ownership, so please do attend that as well. I'm looking forward to that myself. But again, if you're interested in this kind of middle housing, either construction methods, design, financing, planning, zoning, if you'd like to join us, please, again, second Thursday, 9 to 10 a.m. Thanks, Mel.
Thanks, Ayako. And I've put in the times as just a reminder of the different meetings with a follow-up email to get added to that meeting and calendar invite. If you're not yet a part, get our newsletters, jump onto our website and go, there's a tab up top that says join newsletter. There you can join and we send out twice a month updates about the meetings, the agendas, times, how to engage. That's a great way to kind of stay attuned to what's happening in the region and how the pillars are working, just what they're doing, what strategies are they using, and if it makes sense for you to be at the table, which we want everyone there. So I was talking to a partner earlier this week, someone who's looking to, was interested in learning more about the collective and their type of housing and how they're experiencing and how they're seeing housing insecurity affect the clients and the population they serve. And I told them, I was like, this is such great information. We need, those people who are at the table, those people who are a part of our pillar groups, our working groups. Those are the people that their passions, their expertise, they're the ones that are setting the trajectory of the collective. They're the ones that are helping us identify what we target. And we know that housing is massive and our mission is massive in terms of looking at housing from those who are experiencing homelessness to home ownership, but we're only good as those who are a part of it. So if there's some opportunities for the collective, for other partners in the space to help make housing more feasible, whether it's rental, home ownership, shelter, whatever it is, please join the working groups because that's where the work is done. That's where you're expert. We lean into the expertise. This platform here is used as an education and learning, but our working groups are where we create the true impact within the collective. So, feel free to reach out and join that space.
Mel, may I add a comment?
Yeah.
Back to the missing middle, I see Agrippina Neubauer from the City of Riverside on the call, but the City of Riverside is engaged in a very innovative exercise by focusing on missing middle housing. The city received a grant to design construction documents for anything from a duplex to what they're calling a bungalow, not bungalow. Anyway, they're, like a little courtyard, small courtyard style multifamily. So again, very interesting to keep tabs on this. City of Riverside wants to build more missing middle housing. It doesn't mean affordable, but it could be market rate and maybe a little bit smaller so that it is a little more lowercase affordable. Again, all eyes on City of Riverside. So thanks to the city for leading that charge. And Damien O'Farrell and others on the call really did help to push for that grant to be approved with SCAG. So again, we hope more cities, if you're a city on this call and you're interested in promoting the building of more missing middle housing, please do contact us. We'd love to connect with you. Thank you.
Awesome. Well, we have a little bit of time for any collective partners, members who'd like to provide a quick update or elevate any event that's happening or anything that we need to follow. So we could take a few minutes if there's anything, if you want to come off mute and just share out, or if you want to raise your hand and if there's multiple people, but feel free to share out. This is an opportunity for collective members to do so, to elevate anything.
Can I say something?
Yep, jump in.
All right. Good afternoon, everybody. Clemente with NPHS. Just wanted to share a project that we're working on. It's going to be bifurcated in several stages. California there are 19 or 20 states in the country, and I think some of you might have already heard this, that have enabling legislation at the state level so local government can create a community land bank that has statutory authority to remove and settle tax delinquent properties. So with that said, we see collectively, I think a lot of us see an opportunity that, and this kind of reminded me, I probably should say something because it's what Ayako said about small infill development and what other folks are doing, mapping out vacant land. So we commissioned the UCR when we got like 8 professors, like geniuses, working on this. They are mapping out this tax delinquent parcels in both counties, working with both counties at the county level, Board of Supervisors, the tax assessor's office, and they're getting this real-time data. Hopefully, it'll be a proof of concept that we need a local government to create a community land bank to expedite the transfer of tax delinquent property to affordable housing developers. So it'll benefit anybody. So the short term here is we're mapping out land. There's going to be some land use innovation here. Let's get it to the affordable housers to get more units. A lot of what we're seeing of the initial data is tax delinquent single family homes. So back to Ayako's point, there'll be a lot of, I think, home ownership opportunity here, as well as very small lots that are tax delinquent, and we can get creative in doing some small infill development. And there are larger lots as well. So once the research and everything, there's Ryan Sears is leading this. He's working with a lot of folks, some of our partners here. Lift to Rise, part of the think tank. We're going to have a small event just to get the legislators, the policymakers to look at this data. But there's going to be a broader event, and I think, Melanie, it'd be great for us to partner. That way we can share the results to everybody in a larger group. So I just wanted to pin this initiative. Hopefully, this proof of concept will lead to some kind of legislation at the state level. I don't know. We'll give it a shot, but there's people smarter than me working on this, so it's in good hands. So just wanted to share that update.
That's great. Thank you, Clemente. I think there's a lot of ways that our region can benefit from this policy point as we look at this programmatic stance too of creating something that's streamlined. And if we see this policy change, how can that benefit be just more impactful in our region? So thank you for elevating that. And we could talk more. And we'll pin that for our expansion of housing solutions pillar to really kind of dig into that.
Melanie, I have a thought. Hi, everyone. I'm Heather Sanford. I'm CEO of Mission Hope down in Southwest Riverside County. Jay, first of all, happy anniversary. I'm glad you're not sending your wife to Cancun alone. And I wanted to just touch on your question you put in the chat about anyone seeing programs where volunteer labor has been used. We partner with Lennar Home Builder. This might just be like obvious, but they have an entire program called Homeful, and it's dedicated just to this exact thing. So they've done huge, I'm talking, $750,000 projects for us in this exact way. So I don't know if you want to connect with them or other housing developers like them, like market housing developers that have a nonprofit leg to them. So just wanted to throw that out there if you didn't already have that on your radar. And to Ayuka, and I'm sure I'm saying your name wrong. It's beautiful. But I am so excited to hear about this bill and that you guys have it as one of your pillars to use the already vacant housing. Melanie and I talked about that last year when I met her. I said, why aren't we using the 14 million houses that are already here instead of trying to build more? So I'm really, really grateful that this collective is tackling that, and I can't wait to hear more about the developments of those things.
All right. Well, it sounds like there's just a lot of great stuff happening in our region. Exciting. And I'm excited to see you all here today. If there isn't anything else, I'll go ahead and give back 20 minutes to everyone in today's call. But I really appreciate you all being here and look forward to seeing you guys in our pillar working groups. And if you need to be added, I'll hang on for a little bit more if you want, if you have any questions or anything. But appreciate you guys all being here, and I look forward to seeing you around. Take care.
Thank you.
Thank you, Mel.
Thank
Bye.
you.